Hey guys, welcome back. In today's video, I'm going to talk about another strong buy, Activision Blizzard, or ticker symbol ATVI. As you can see, their one-year growth is pretty nice at 17% or almost $11. They do have quite a bit of volatility, so you can get in at some of the lower positions. 69% of analysts are saying to buy, and 33,000 people on Robinhood own this app. Now, if you're not familiar with Activision BLizzard Inc., it engages in development and publication of interactive entertainment. It operates through the following segments: Activision, Blizzard, and King. One of the games that specifically I play that is from Blizzard would be StarCraft, Warcraft, Diablo, are a few just to name. Now, they do employ almost 10,000 people. They have been founded in 1979 and headquartered in Santa Monica, California. Their average volume is around 6 million, which is very high. They pay a small dividend yield of 0.47%. And their PE ratio is very high for my taste at 113. I would probably not invest in this company personally because I like PE ratios that are lower than about a 50. Honestly, anything lower than a 20 I would buy automatically, but still a good company to get involved in. They have a $56 billion market cap, and their CEO is Robert A. Kotick. Some of the collections are video games, 100 most popular, kids, entertainment, publishing, media, software service, and retail. It is 15% higher right now to buy ATVI. Their average price paid was around $64, and I do not see it going back down to that amount. If anything, I could see it going down to about a $71 to $70 mark, but as of right now, analysts, 69% are saying to buy, 31% are saying to hold, and 0 are saying to sell. Now, on the buy summary, it says Skylander and the Call of Duty are still likely to generate the majority of the console sales, and Destiny is expected to remain one of the marquee titles for the current generation console, driving the sales. Destiny, the first new franchise from Bungie since the smash hit Halo, should drive significant sale growth and gain and hold on to the large user base. Now, on the sell side, it says Activision entered mobile gaming well after some of its peers, which could put it at a disadvantage to competitors like EA that are increasing user engagement through cross-platform strategies, as well as competitors have emulated Activision's strategy of streamlining investments into a few titles to develop deeply immersive and engaging games that can compete with Activision's biggest franchise. You know, this is from the same company, Morningstar. They have good, they have bad, just like every stock company. There's no way of knowing for sure, but I believe that Activision is a great company to buy into right now. They do have expected earnings next on November 1st, but they did beat their estimated earnings last quarter. Looks like they're making around 45 cents per share in earnings. Now, that is really good. Also, a few companies to look at: Disney, EA, Take-Two Interactive, and NVIDIA. Well, we're going to talk a little bit more about NVIDIA in another video. And just because I like to use the streetrating.com, it gives you more of a visual understanding of what's been going on the last couple of years. Their target price, as you can see on the top right here, $91.58. We're currently at only $73, so that is a ton of room for improvement. As you can see too, they've had a rating of a buy since it says May 4th, 2018, at which point they were in a hold position for a small amount of time. But as you can see, overall, since back in 2016, they've had a buy rating, very strong. Now, they are a B rating or a buy, and in my book, that is a strong buy to me. Again, you can see the annual dividend yield, and their annual dividend rate is around 34 cents per share. Now, with that said, there's a lot of volume being traded with this company. There's a lot of people that are engaged and using this company for long-term investments and short-term gains as well. As you can see here, there was a slight dip, and then it rose, and another slight dip. These are buying opportunities, is what I like to call it. Now, with that said, it is a buy because it's driven by a few different highlights, and let's talk about those. Now, the net income from the same quarter last year, as it significantly exceeded the S&P 500, Their net income increased by 65% compared to last year, rising from $243 million to $402 million. So they have a lot of money to play with and use in future investments, as well as current strategies that they're implementing. Now, the revenue growth trails the industry average of 15%, but that's okay, with a slight increase of almost 1%, which helped boost the earnings slightly. Current debt to equity ratio is 0.42, which is low, showing that they know how to successfully manage their debt levels, along with maintaining a quick ratio of 2.56, which clearly demonstrates the ability to cover short-term cash needs. Now, also improving on their earnings per share, they reported lower earnings of 36 cents versus $1.27 in the prior year, but they are expected this year to improve from 36 cents to $2.62, almost double from last year prior. Also, the gross profit margin for Activision BLizzard Inc. is currently very high, coming in at 79%. But regardless of ATVI's high profit margin, it has managed to decrease from the past since last year, and they are a net profit margin of 24.4%, which trails the industry average. Now, as you can see, they're right here alongside with a lot of their competitors and peers, which is okay. Here are some of the highlights of the statistics that we were talking about, and as you can see, the only one that's really higher than them right now is probably Adobe Systems. If you'd like me to do any videos on any of these companies, let me know. I will be doing a video on EA and Zynga pretty soon. Now, to get into some of their factors, their growth is 1.5 out of 5 stars, total return 3 out of 5, efficiency 3 out of 5, price volatility 4.5 out of 5, solvency 4.5 out of 5, and income 3 out of 5. So that helps kind of solidify that it is a strong buy. We do like to see that the same period last year has increased for the stockholder equity or net worth by 6.49%, which is great. The overall key liquidity measurements indicate that the company is very unlikely to face financial difficulties in the near future. So this is a good company to get involved in. If you'd like to get involved with this company, it's probably time to do so now with the dip, especially once they're saying it's going to go up to around $91. Some of the PE ratios, price cash flow, all this stuff that other people like to look at is right here in front of you, as well as sales growth, price per sales, price book, and earnings growth. Now, I like looking at the street because it is a great company. I like looking at the street because it's a great, basically, analyst report that covers a lot of different people and puts it all into one report for you, and they are continuously updating it. This one was updated on 8/23. We're now 9/10, but it's been a while since I've done a video, so that's the reason for that. But usually when you go onto the street, it's updated, I think weekly, if not monthly, on some of these most popular stocks. So if you guys are interested in that, all you have to do is go to thestreet.com. I don't get paid to say that. I have no affiliation with them. It's just a really cool setup that I like to look at. And guys, if you have any other videos you want me to share with you, feel free. Just drop a comment below and I can do some videos on whatever you'd like, just like this one. Also, remember to smash that like button, guys. It really does help. Helps me to feel a little better about what I'm doing, and makes me see that a lot of you guys out there like what I'm doing. And it also helps with the whole YouTube algorithm so that we can keep basically moving up. We're at 176 subscribers right now, hoping to get to 200 in the next month or two, and hopefully to 1,000 by next year. So help me out, guys, and share this video to as many people that you think would like this. All right, have a great day.